I pay my premium, I should be covered. So you own the property, but do you have insurable interest? Guys, welcome back to CCG TV, Capital Claims TV, where we talk about all things insurance. Today's topic, just talking about you owning the property, or do you have insurable interest? And that's the scary part. So some people pay their policies 10, 15, 20 years, then disaster strikes, and the insurance company start asking questions like, who's the owner of the property? And most insureds, or people that think that they're insured, of course it's me. I've been making all the payments. I've been doing everything that the insurance company's been asking. I've been letting them come and do their inspections. Of course I'm the owner. And trust me, that question alone can change the entire claims process. Because many property owners transfer the property into trust, living trust, some estate planning structures, family trust, LLCs. And while all this is going on and being done, they never, ever update the insurance policy properly. And that's where you have a disconnect between the name insured and the actual person who has insurable interest into the property. So let's talk about insurable interest just for a little bit. Most people think I pay my premium, I should be covered, and that's it. That's not always the way it goes. So insurance is built around legal and financial interest in the property. Meaning if you suffer a financial loss from damage to the property, you genuinely have an insurable interest. Where it gets a little crazy is mom basically puts the property into a trust and dad dies. The children inherit the property and an LLC gets formed. Or a rental property gets transferred doing a refinancing or estate planning. And nobody calls the insurance company. Nobody updates the declarations page. Nobody adds the trust. Nobody checks whether or not the policy still aligns with ownership, right? Now you have a fire damage, burst pipes, a hurricane happens, whatever, some sudden loss that's catastrophic. Now you need to file an insurance claim. And suddenly now the underwriting, the coverages, and the claim all collide. That carrier is reviewing now who owns the property, who's the name insured, who signed the application, who receives the proceeds, who has financial exposure. And now this is where a lot of policyholders run into major problems. And I've seen a ton of this before where the trust owns the property, but the deceased parent was still listed as the insured. I've seen claims where the LLC owned the building, but the homeowner's personal property was never updated. We've also seen cases where people have inherited properties and it's just been sitting in probate, unclear ownership, major water loss or major catastrophic event had happened or is still unfolding. And this is where a lot of people start getting shocked when they start getting those reservations of rights letters or the carriers start questioning who's getting the proceeds. And this is why proper policy structure really matters. Because insurance companies don't just investigate the damage, they also investigate the legal structure of the insurance policy, especially on the large loss ones. Yeah, when that money starts getting bigger, they take a closer look. They come with the magnifying glass. Especially when mortgage companies, trusts, investors, or estates are involved, they take a real good look at it. And let me make a clear point. It doesn't mean that coverage just disappears. It means that it can absolutely complicate the claim. And we're talking about delayed payments trigger additional documentation that the carrier is asking for, disputes over who signed what, who can endorse the check, who has authority, who's qualified as the insured. Of course, many people create trust for good reason, right? I mean, real estate planning, asset protection to avoid probate, passing wealth down to their children. Of course, it's super smart, but your insurance policy has to evolve with the ownership structure. Because if the trust owns the home, the trust may need to be listed correctly. And if the LLC owns the property, then the LLC may need proper coverage. If multiple family members inherit the property, the carrier needs that updated information. And this is where a lot of people accidentally create these silent coverage gaps. And nobody finds out right until there's a huge 6-7 figure loss. And that's why one of the smartest things property owners can do is review the policy after transferring, after creating a trust, after your estate planning, after a refinance, adding owners, moving property into an LLC. This stuff should be reviewed after all the documents, all the paperwork, whatever transfer you were working on or doing has been done, then you need to review that insurance policy. And I say that because I believe that the ownership structure and the insurance structure should move together. And let me say this directly to investors and property property owners that own a portfolio. These issues come exponentially more dangerous when you own multiple properties, because now you have different LLCs, different trusts, different named insurers, different companies or different mortgage clauses, different management structures, and one paperwork mistake can create operational chaos during the claims process. And especially if you have a lender involved, just imagine you have a large fire loss, you have the mortgage company, you have the trust, a deceased insured, and a check issued incorrectly. And now you can have the claim be administratively paralyzed. That's why a lot of sophisticated property owners treat their insurance reviews like a financial audit, not just a renewal. A lot of people think, I just renew my policy so I'm good. And that's a big no, because renewal does not automatically mean it's aligned. If you're listening to this right now, just go and check who is listed as the named insured, who owns the property, is the trust disclosed, is the LLC listed, did ownership change after the policy was written. Check all of those things, because the devil is in the details in insurance property. In insurance property claims, the devil is in the details. I'm gonna say this and I'm gonna let you go. Insurance claims are not just about the damage. It's about documentation. It's about ownership. It's about authority. Insurance claims are about the insurable interest, the financial exposure, the policy language. And if your ownership changed, but your insurance never evolved with it, you may have a problem that you don't even know that exists. That's why reviewing your policy before a loss happens matters more than arguing after one. Because after a loss, leverage changes. And trust me, that's not the moment you want to discover that your paperwork is not aligned. Thank you guys for watching CCG TV, Capital Claims TV. Listen, like, subscribe. Check me out for all your insurance crazy thoughts, crazy ideas. Please subscribe to the channel. Thank you.